This is Reuters Today. Coming up, millions without power after outage in India, and Olympic shame for shuttlecockers charged with throwing matches. We start, though, with China, where official data shows the world's growth engine barely growing at all. Factory PMI missing forecasts and sinking to an 8-month low in July, just above the 50 mark, dividing expansion and contraction. HSBC's rival survey rising to its highest level since February, showing private sector factories are beginning to recover, but that number still below the 50 mark. Let's get to Reuters' John Gordon in Hong Kong. Has Chinese manufacturing bottomed out yet, John?
Would hit a bottom once we get past the first half here, though, and that's reflected in GDP expectations across the market. We've seen a range of easing measures ahead of this on the monetary side that should have helped out the sector, and that should be paying dividends by now in terms of growth, at least according to Goldman Sachs. Here's a soundbite for you from Helen Zhu.
The impact of a lot of the monetary and fiscal policies implemented over the past few months will gradually filter through to the fundamentals, and that's likely to boost fundamentals and data across the board.
We're not seeing that, though, yet, Axel, so optimism from Goldman Sachs for now.
And it seems markets are increasingly looking at alternatives to measure the Chinese market and to measure the Chinese economy. What are those alternatives, John?
Yeah, you know, there's a couple that are gaining popularity. Electricity consumption, for one, is a pretty good proxy for industrial production. The data is a lot harder to fake because of how it's collected through the various national bodies. We've got a chart here that shows if you ignore the seasonality issues in January, February there, growth has been pretty tepid in recent months, and if it doesn't pick up, you can bet the economy itself isn't doing too well. Another couple ones that people do like to look at are cement, which obviously is linked to infrastructure spending. So if we do see stimulus pick up, that'll certainly pick up, as well as coal consumption, which has been falling off. But with Premier Wen Jiabao cautiously opening the door to more stimulus and regional cities enacting some mini packages, it definitely will be worth watching some of these indicators instead of just the usual suspects, Axel.
OK, John, very good. Many thanks. More bank earnings out this morning here in Europe. SocGen joins its peers in reporting worse than expected Q2 profit. France's number 2 bank hit by one-off write-downs on fund unit TCW and Russian subsidiary Rosbank. Standard Chartered bucking the trend once again, though. The Asia-focused bank on track for a 10th consecutive year of record earnings, despite its slowest profit growth in a decade. Let's talk about the context. Peter Westerway is Chief European Economist at Vanguard. Morning to you, Peter. Will the Eurozone be saved by its central bank tomorrow, do you think?
Sorry, I didn't quite catch that.
Will the Eurozone be saved by its central bank tomorrow?
I think the central bank will do something that will help things along the way, but I don't think it's going to be the game changer that maybe people are expecting.
What steps are you expecting from the ECB?
I think we're probably going to hear something about more asset purchases, and I think that will probably come alongside a request from Spain for access to the EFSF. I think only when that happens will the ECB indulge in more asset purchases. And I think we need to have a convincing statement from the ECB that they're going to do that without limit in a really kind of convincing way. At the moment, we're hearing much too much about Bundesbank reservations and so on. So at the moment, it's not entirely clear how the ECB are going to make good on what Draghi was hinting at last week.
Final PMIs out today. Are we going to see any signs of light at the end of the tunnel, would you say, Peter?
Not yet. I think we're still bumping along the bottom. You know, all the activity data that we've been seeing has been pretty weak, and I don't think we're going to get out of that for a while yet. So I don't think there's going to be much good news there.
And a German 5-year auction today, yield at 0.3. Would you be a buyer of that?
Not for me to say, but you know, obviously these yields are getting down to ridiculously low levels. We keep thinking they can't go any lower, and they do. So it all hinges on whether the European crisis gets solved, and then things will snap back to more normal levels. But as I said, I don't think we're going to see that yet.
All right, thanks, Peter. Other news, hundreds of millions of Indians left without power in one of the world's worst blackouts. Miners were trapped, train travellers stranded, and hospitals plunged into darkness. India has been forced to buy extra power from tiny neighbour Bhutan to help it recover. And scandal at the Olympics. 8 female badminton players have been charged with misconduct after attempting to throw matches to secure more favourable draws. Spectators shouted abuse as the Chinese, Indonesian and South Korean teams deliberately sprayed shots and duffed serves to concede points. Day 6 of the Olympics today, and several chances for the host nation to bag that elusive first gold. Tour de France winner Bradley Wiggins goes in the cycling time trial this afternoon. Before that, Helen Glover and Heather Stanning compete in the pairs rowing final. Tonight in the pool, Australia, the US and Brazil vie for the title of world's fastest swimmer in the men's 100 metres freestyle. That is it for now. I'll leave you with our Olympic pick of the day. South Korea's Choi Byung-chul celebrates defeating China's Ma Jingfei during their men's individual foil quarter-final fencing match. I'm Axel Threlfall. This is Reuters.